Ladies and gentlemen, good day, and welcome to PI Industries Ltd Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Siddharth from CDR India. Thank you, and over to you.
Thank you, Avirat. Good afternoon, everyone, and thank you for joining us on PI Industries Q1 FY26 earnings conference call. Today, we are joined by senior members of the management team, including Mr. Mayank Singhal, Executive Vice Chairman and Managing Director, Mr. Rajnish Sarna, Joint Managing Director, Mr. Sanjay Agarwal, Group Chief Financial Officer, Dr. Atul Gupta, CEO, CSM Actchem, Mr. Prashant Hegde, CEO, Actchem Brand, Dr. Ramesh Subramaniam, Global CEO, PI Health Sciences. We will begin the call with key perspectives from Mr. Singhal, following which we will have Mr. Agarwal sharing his views on the company's financial performance. Thereafter, the forum shall be open for a question and answer session. Before we begin, I would like to underline that certain statements made on today's call will be forward-looking in nature. A disclaimer to this effect has been included in the investor presentation that has been shared with you earlier and is also available on the stock exchange websites. I would now like to request Mr. Singhal to share his perspectives with you. Thank you, and over to you.
Yes, thank you. And good afternoon to everyone. Just also wanted to add that we also have on a call for the first time Mr. Jagresh Rana, the Global CEO of Biologicals, who is also joining the call. So now let me begin by sharing my views of the business environment and the role of PI as a leader, as a technology solution provider, and a global partner in the Actchem space. The global Actchem industry is navigating through a dynamic market environment and landscape, having witnessed an overall decline over the last 2 years. Low commodity prices, farm income, and high interest rates and extreme weather events are uncertainty related to tariffs over the last 6 months have impacted the market sentiments. On the positive side, there's a gradual destocking of inventories in most of the markets and a secular trend on global innovators pushing the China Plus One strategy. On the domestic side, we have seen large favorable monsoons, positive sowing trends in major crops. The abrupt regulatory challenges on biologicals, fertilizer shortfalls has impacted the growth momentum and sentiment of the Kharif season. Beyond the near term, development of advanced crop care solutions remains a global priority. Given the underlying requirements for higher and more reliable crop yields and the shrinking arable land, weather variabilities and growing population, innovators adopting to new technological initiatives, including AI-based platforms from research to farms. The initiatives are aimed at improving productivity, efficiency, farm output, and meeting regulatory compliances. Concurrently, the demand of biologicals for integrated crop health management has increased given the challenge of climate change. In the current landscape, the global companies continue to elevate their strategic partnerships across the value chain in pursuit of cost optimization and build resilient business models amidst heightened regulatory environmental challenges. I now move on to a business highlight for Q1 FY26. Our performance is broadly in line with the H2 F26 plan. For the Actchem's export side, we have seen a decline that is in line with the customer delivery schedule to balance the inventory levels. As explained before, we have built in transitional softness on the financial year 26 plan. However, it is important to highlight that the growth of the new products of commercialized for the last 3 years have registered a decent 46% growth year on year. We are expecting to resume the acceleration of supplies in H2. We will commercialize 6 to 7 new products or molecules in the remaining quarter. Our electronic and specialty chemical area is also gaining traction and scale. Now, on the domestic side, we have seen a growth of 6% year on year for Q1 26, which could have been much higher in temporary regulatory disruptions were not there in the biological space, given PI's play in that arena. Given advanced product mix and crop solution-based approach, the momentum has sustained, and we've introduced 2 new brands in Q1, scheduling an introduction of 3 new products in the year. Our development pipelines comprise 20 plus new products and they're in various phases of development and regulatory registration. Now coming to pharma. During the quarter, our pharma businesses showed an 886% year-on-year growth in revenue. We are seeing good tractions in the new business inquiries with aggressive investments in business development. Our efforts to establish an integrated CRDO platform which is delivering world-class solutions by leveraging a combination of high-quality assets, world-class processes, solution rendering backed with knowledge, and business development strategies led by strong leadership are continuing to take shape and show some early bloom. We have carried our planned upgrades and additions to the assets across various locations to support the path of strategic growth. With the acquisition now coming to the biological space, with the acquisition of PI Healthcare, PI has taken a significant step in scaling a biological business globally and bringing innovative, sustainable solutions to the farmers across. Proprietary technologies, including Pretech and Harpin, which help in withstanding disease and environmental stress, leading to high yields and better financial returns to the global grower. We are intensifying our further R&D efforts back on this platform to integrate solutions with a focus for the markets of US, Brazil, Mexico, and India, and partnering across with others. As one of the key strategic milestones, which is now coming, I'm pleased to share, we have filed the first registration of Indian innovation to be discovered out of India. Pyroxeniliprole, a significant breakthrough of the innovation journey taken away by PI over a decade, is now showing its early shoots. We are happy to further say there are other products in the pipeline at different stages of development and research. We continue to tap our growth opportunities in the various arenas of ag science, health sciences, and specialty chemicals, marking our transition from an agri-science company to a life science company. Each of these segments and growth engines have significant potential to expand and strengthen our position at a global level. We are continuing our investments in these growth engines to ensure we pave and lay the foundations for the next level of robust growth in the coming years. Now let me take you in terms of our outlook for the global industry. It's still passing through a tough time, and an ongoing U.S. tariff drama is unfolding every day. We remain cautious and optimistic about reimagining the growth of momentum in H2. I will highlight certain initiatives that we are working to further strengthen what we see, our outlook. CSM Exports sees introduction of new technologies to be able to compete at a global platform. We are investing in technology-based augmentation in our distribution business in order to drive customer centricity and efficiency. Continue to invest in newer acquired businesses to scale up drive to bring about a more rounded growth. Implementing business process reengineering like SAP HANA, global supply chain integration, strategic synergies. Further, not only that, based on our growth expectations, we shall be continuing to invest about 700 to 800 crores in the year. With this, I would now like to hand over the discussion to our Group CFO, Sanjay. Thank you very much, and Sanjay, over to you.
Thank you, Mr. Singhal. Good afternoon, everyone. I'll summarize the company's financial highlights for the quarter ended June 30th, 2025. Please note that all the comparisons are on year-on-year basis and refer to the consolidated performance of the company. So, as you know, Q1 unfolded against the backdrop of macroeconomic headwinds and geopolitical uncertainties, which continue to influence the market sentiments. And we anticipated these headwinds in our annual plan, which is H2 weighted, and therefore the results are broadly in line with the business plan. To share the performance highlights, during Q1 FY26, we reported revenue of 19,005 million, a decline of 8% over the same period of last year, and a sequential growth of 7%. On a 3-year CAGR basis, the growth in Q1 is 7%, as we had registered a growth of 8% in Q1 FY25 and 24% in Q1 FY24, making it a high base. Our domestic business grew by 6%, backed by Kharif season, and we remain buoyant based on favorable monsoon forecast and strong product portfolio which we have. However, there was a decline in the biological segment due to regulatory changes. Our pharma platform rebounded, registering revenue growth of 187% over previous year, driven by deepening relationship with biotech and big pharma innovators. Our development spend into creating fully integrated pharma CRDMO platform has helped to create an accelerated pathway for strong future growth. Q1 FY26 results also includes the financials of our global biologicals business, which was acquired in August 24. The business has been performing in line with the business plan, with many innovative products in the pipeline. Due to the favorable product mix and cost optimization projects, our gross margin for the quarter has expanded to 57.4% and increased by 5.7%, and our EBITDA margin remained resilient at 27.5% for the quarter. We expect the ETR to be in the range of 22 to 23% for the next 2 to 3 years. Further, the trade working capital in terms of days of sales has increased to 91 days from 73 days in March 25, while better inventory management has kept the inventory days almost at the same levels of last year. Our healthy performance leading to stable cash flows provides us the flexibility to continue with our capex plans, allocating capital towards our future growth engines, which we have done in PIHS, our pharma business, PHC, our global biological franchise, and discovery R&D. Our balance sheet further strengthened during the quarter. Net worth increased to 1,06,003 million and a healthy net cash balance of 41,554 million. Given our leadership and strong partnership with global AgChem companies, our innovation pipeline, we expect accelerated H2 to drive a single-digit revenue growth for FY26 with a sustained EBITDA margin. With this, I'll conclude my opening remarks. I will now request the moderator to open the forum for Q&A. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Aditya Jawar from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity. Now, it would be great if you can give us some sense on, the applicability of tariff on our key product in the US as well as other products. How do we, think about it, and what is our interaction with customers suggesting? Is it completely exempted all our product, or the customer is willing to absorb? Some sense on that. That's the first question.
Right now, the given scenario, there is no clarity on the implication of tariff, but at the present it's not applicable. And as you know, the tariff scenario is quite a confused one. So for the present, we don't see any challenges.
Okay. My second, question is, any update on our registration of one of our key products in Brazil, Pyro?
So let me answer. Number one, we are not responsible. That's Cumia's product. We're just a contract manufacturer, to be very fair. But already it's been registered in Brazil, from what my understanding is, from public domain.
But our supplies, to a Brazilian market.
No, we supply
supply.
We supply to a customer who may in turn supply to Brazil.
Fair enough. Next question: that when can we expect normalization of biological sales in India?
That's an interesting question. As you know, this is a fact which is still in the hand of the government. We would have want it to happen as of yesterday, but obviously it's going to take some time, and I'm sure we probably should be able to cross this corner over the next couple of months.
The final question, to give a fillip to our, domestic business, are we also evaluating some inorganic opportunities in the Indian market?
So very clearly, as you know in my statement, we are looking at many inorganic opportunities at the various parts of the business segment, and definitely why not also in the domestic segment.
Okay, that's it. I'll fall back in queue. Thank you so much, Mayank.
Thank you.
Thank you. The next question is from the line of Abhijit Akela from Kotak Institutional Equities. Please go ahead.
Thank you so much. So on the gross margins, they've come in very strong at about 57%. I know you mentioned the product mix as well as cost optimization projects. Last quarter, I believe we had guided to gross margins in the range of only 50 to 52%. So now, in light of this performance for the first quarter, would we like to update that guidance range? Should we expect to stay closer to these levels?
We would stick to our guidelines, and but yet, as likely mentioned, it is based on the product mix and some of the efficiencies driven by the operating teams.
And these product mix vary quarter to quarter. So, the margin profile will also vary from one quarter to the other.
Okay. So 50 to 52% gross margins and 25-27% EBITDA margins. Is that still the range to work with?
Yeah.
Okay. Thank you. And then the other thing was just a couple of quick bookkeeping questions, if I may. Just on the order book number, if it's possible to share that at the end of this quarter, and also the revenues from plant healthcare for the quarter, please. Thank you so much.
So I think the revenue and the order book is about $1.2 billion. And in regards to the plant healthcare, the revenue is about?
So on a yearly basis, it's around $10 to $12 million.
Possible to share it for the quarter, Sanjay?
Yeah, so it will be around $3 to $4 million in this particular quarter.
Okay, and is this included within the CSM business?
No, that's a separate vertical.
So it gets clubbed under the exports business, what we have.
Okay. All right. Thank you so much, and I'll come back in queue for any more.
Thank you. The next question is from the line of Saurabh Jain from HSBC. Please go ahead.
Yeah, thank you for the opportunity. My question is on the domestic business. Can you please give out more details on why the trade receivables kind of increased in the quarter? Because is it more to do with the push that you did in the market and possibility risk of the sales returns in 2Q?
Okay, so if I may get your question right, Prashant, maybe you can answer. The question is that why has there been an increase in the
trade receivables in the quarter?
Trade receivables, yeah.
Yeah, so one, obviously, there are inventories in the market for the industry. And second, as Mayank earlier explained, fertilizer shortages that resulted in a lot of money being basically diverted to secure the fertilizer. Hence, we have seen a little bit of slowness in terms of agrochemical, especially in terms of collection is concerned. So that is what is reflecting on the receivables.
Okay, and would you also assume a higher risk of sales returns coming in through 2Q?
No. So as of now, our quality of sale is looking good. We don't see any higher returns compared to whatever which we have been tracking from last 1 year. It is in line, so we don't see any major deviations in terms of our returns.
Okay.
And also just to add to Prashant, while Prashant spoke about the domestic business, the numbers when you look at it even from the March 25 and what we're seeing now in June 25, they are broadly in line. So there's been no major increase in the receivables. And as you asked, yes, the receivables what we have, there is no concern at all for us in terms of recoverability, and they are very much in line with the current business environment.
So I think the point also to emphasize is the receivables from the export segment have gone up, which will be in line.
Sure.
Okay.
The other question I had was on the pharma business. Just from my understanding, we reported in the current quarter that the gross margins for pharma business that is about 52%. But to look at the same presentation of last year, it was reported at 42%. Where am I missing?
No, so you're right. The numbers of last year are above 42. There was a classification thing which was done, and therefore the numbers broadly are the same at 52% for the last year and this year also.
Okay. So now like for like 52 versus 55.
Right.
That's okay. And do you also want to make a comment on your guidance for your pharma business? Because previous quarter you mentioned, 75% revenue growth with improved margins. How would you see it now after this one performance?
What are your question on the revenue growth or the margins?
No. So in the previous quarter, you mentioned that you are expecting to achieve 75% revenue growth in FY26 in your pharma business with improved margins.
Yeah, so we are broadly in line with that guideline.
Okay, sure. Thank you. I will get back into queue.
Thank you. The next question is from the line of Naushad Chaudhary from Aditya Birla Mutual Fund. Please go ahead.
Yeah, hi. Thank you for taking my question. 2-3 clarification. First on the biologics regulatory issue, registration requirement. Post, let's assume in next 1-2 quarters, if things get settled, how the industry shape would look like versus what it is today? Can it consolidate? Can it benefit to players like you? How you see post issue gets resolved?
No, sorry, I didn't get the question. I mean, are you asking that if the issues get resolved, would the industry get consolidated?
Yes.
Well, that would be very difficult to say because I don't think I would be able to give that answer to be fair with what the industry does. But given the fact it is a temporary shutdown, it will be certain changes. In my view, it will probably get people to go back to business. That's really the issue. Consolidation is not the key issue.
And it is also progressing very positively in the court in last couple of hearings, and I think industry expects that this issue will get resolved in next maybe a month or so.
As you would expect that, as you would have all seen in the past, biological is a key agenda of the government to create balanced, equal environment for agriculture, and also one of Prime Minister's most critical driving factors, and which also gave the company the spirit to say we should invest in build biologicals. So I'm pretty sure this will be a top priority to resolve at every level.
And what is the percentage contribution currently from this piece of business, and is it completely zero for now for the ongoing quarter?
Yes, because if the sales are stopped, it stops, so it will be zero. And approximately we have 20+% revenue coming from this segment.
20% of the domestic revenue?
Sure.
Yeah. Second, what is the status of our 2 MPP which is in work in progress, and by when this should be operational, and the ramp up expectation?
So one plant would start by the last quarter of this year, and the other should probably get into the first or the second quarter of next year.
And ramp up plan?
Ramp up is a 3-4 year process.
Okay. And last, on the US tariff, in your commentary, you mentioned it is creating uncertainty plus an opportunity as well. So on opportunity side, what if you can elaborate, what did you
I don't think I just said uncertainty, because opportunity would be if it settles.
Yeah. All right, sir. Thank you so much. All the best.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Good afternoon, and thank you very much. So if you look at your biological segment, globally, where would the margins be once you scale up to a certain critical mass? Would it be somewhere close to the CSM margins or slightly higher or lower? Can you give us some sense of that? And what is the kind of size we can expect, say, in 3 to 4 years' time?
So let me put it this way, biologicals do have a much better margin than the chemical sector. And clearly, but also let me also make it very clear, biological is a long journey. It means investments in developing the products to build mindset to share the benefit in the mindset of the farmer. So it is a balancing equation. And clearly, yes, in 4-5 years, I believe they should be giving us better margins than the other business of the company. Therefore, it's called futuristic in our mind.
Okay. So in terms of the new molecule you launched, PF28 is it possible to give us some sense in terms of the different crops and what is the kind of target market size you can expect, say, over the next 3 to 4 years? And what is the supply chain, plan in terms of raw material, intermediate procurement? How is that going?
Well, I think let's focus on the front end of the market, typically where we say this is the pest segment, the lepidopteran pests. And it has a pretty decent sized opportunity as a pest in multiple crops, specifically in the row crops is where the area of focus will be. And we are at different stages of development and evaluation at the given moment to look at this segment.
Prashant, you want to add something?
Yeah. So it's effectively all important row crops, as Frank mentioned, sugarcane, rice, pulses, and a few vegetable crops also that includes tomato.
Okay. And is it possible to give us the cost of development? And is there any further development expenditure required for scaling this up?
That will not be possible. Thank you.
Okay. One last thought on Jivagro vertical. If you see the last 2 years, actually the revenues have declined. So how much is the Jivagro revenue in this quarter, and how do you expect that vertical to perform in your domestic portfolio this year and next year?
So Jivagro is contributing again roughly around anywhere between 17 to 20% in terms of our domestic revenue. And we have completely changed our portfolio in Jivagro. Earlier it was mainly a generic product. Now we have more specialty products which are suited for horticulture crops. And it is shaping as per our expectations. So it's basically we are treating this as a specialty division, and we continue to do so.
Okay. So one last thought on the pharma segment. In terms of the overheads, which you have reported 839 million, and there is an inter-segment adjustment. So in terms of the ramp-up of this business, where do you expect the overhead to settle on annualized run rate? And what is the inter-segment adjustment you have shown in the segment results in the BSE filing?
Sorry, but did you get the question?
Yeah. So broadly, the pharma overhead, what you've seen is in line with the growth plans what we have. On a run rate basis, yes, you can take this as a base. Now, it has higher development spends currently at this point of time. But on a 12 to 18 months period, yes, we would look at a break-even EBITDA situation in this business.
And what is the inter-segment adjustment which you have shown? Because the losses are higher if you look at the BSE filing compared to what you have shown in the presentation. So what are the inter-segment adjustments in the segment results?
No, that is only between the corporate expenses which get allocated between the two lines of business, which is agrochemical and pharma.
Okay. So the business loss, should we go by what is reported in the BSE filing? Is that the loss you are?
Yes, that is right.
Okay, fair enough. Thank you. I'll join the queue.
Thank you. The next question is from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity. So first question is in terms of our guidance. So given that first quarter has been relatively muted, and if we were to get to maybe middle single digit growth for FY26, we'll have to grow by about 9-10% for the rest of the year. What gives us confidence, given that we have also just spelled out in terms of headwinds in domestic channel inventory plus the biological issues? So is it backed by certain firm orders on the CSM side? What is our thought process on this? Thank you.
So very clearly, as we see, there is a guidance well given of the numbers that we have. Obviously, it has been backed up by certain understanding with the customers on some of our on the CSM side. Domestic business, we were looking for a more aggressive plan, but we would see if the biological shape up fast, we should be able to still somehow get there. If it doesn't, then yes, it could pull a few things down, to be fair. And the other segments that we've invested in, we are seeing as per plan running right now. So I think we would still maintain that guideline. But as I've also mentioned in my speech earlier, that there are headwinds and tailwinds in this whole dynamic world, whether it is tariffs or whether it is the agroclimatical situation. And hopefully we believe that at least talking on the other hand was the positive side that we said has happened, so which could drive the balance to happen. So we still remain conservatively positive to maintain our guidelines, if I was to put it very straight.
Thank you, sir. The second question on the Firestone unit role. So in terms of commercialization, what are the timelines that we are looking at, given that it's finding good results in phase 3 trials? And in terms of the marketing on a global scale, what are our thoughts currently? How are we going to go ahead with it? Thank you.
So as we said in our continued business model approach is partnering for innovation. If you look at PI started the business of bringing innovative products as a pioneer in India. We created the next business play of pioneering of bringing in contract manufacturing for patented products and commercializing at a global scale to support discovery partners. Now we are getting into the phase of creating new NCEs, and we will be looking for partnering across the global stage. We are in talks, advanced talks, in certain cases, in certain geographies. We are looking to talk with certain distribution partners at a global level to see how we could take it to the rest of the world. Given the India context, obviously we will leverage our near-home capabilities of being able to put innovation out into the market. So that's really the approach we're taking at a higher level.
And in terms of commercialization timeline?
You see, that right now, as you mentioned, that we filed for regulatory filing for now for India. We'll eventually look at a certain timeline for the other geographies with our partners in time. So I think we would see this product come to life maybe in a 2.5 year scenario.
Thank you so much, sir, and all the best.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
Yes, sir. So in CSM, we are going to launch 8 to 10% in this year, in FY26. And earlier, we have seen the momentum was 50% of this. So how are we going to plan for CSM, and how is the growth momentum in the coming FY27-28, considering the product launch is going to accelerate?
Well, as you know, the product launch is going to accelerate. That gives us a little confidence. The long-term story looks good. But the short term, as you know, the start of a product is minuscule. But they scale up, and typically in the ad world, the product continues to scale up for 10 to 15 year scenario. And on the other hand, other segments which you put here, which continue to contain the products, are in the specialty or high-end technology chemistry, using specialized applications like electronics and others, which are also showing some good shoots, given the unique PI technological capability for high control quality manufacturing, followed with chemistry and process controls. So that's the other opportunity that is significantly unique to PI.
And what is the capex and tax rate guidance for FY26?
Yeah, will be around 700 to 800 crores in this financial year, and tax rate will be around 22 to 23%.
Okay. Thank you so much.
Thank you. The next question is from the line of Navid Virani from Bastion Research. Please go ahead.
Hello, am I audible?
Yes, we can hear you.
Yeah, thank you for the opportunity. So first one was on the pharma business. So we mentioned in our presentation that we are in the process of building strong relationships with, biotech and big pharma players. So this is a two-part question. Can you share some progress for us to understand better where are we on this journey? That's one. And secondly, is our strong, experience and, history helping in CSM, helping us to forge relations faster in the pharma division?
Sorry, I didn't get the second part of the question.
The second part was, sir, we already have a very strong name in agri CSM, right? So is that helping us build the pharma business slightly faster than that not being the case?
Well, obviously that's a credible leverage. But in terms of what is being done in terms of developing the business, at a high level, Ramesh, maybe you can come in and explain.
Yeah, sure. So I'll take it up. Thanks, Mayank. So on the first piece, I think we stated sometime last year that our goal is to bring in 3 to 4 large pharma clients. We're well on our journey to get there. We've already onboarded 2 large pharma clients, and the trends are that by the end of the year we'll have 2 more. So I'm hoping to get to that 3 to 4 large pharma clients, which will serve as a good base as we continue to grow. Because pharma is sort of immune towards any cash challenges that biotechs may have. They provide you with stability. So that's the goal. The biotech industry is going through some challenges, but we continue to grow our biotech portfolio. So that's an answer to your first question. The second one, yes, it definitely helps. Not just in terms of credibility and name, but also, at the end of the day, it's a contract manufacturing business. There are a lot of technology. So the way we look at things is that we focus on making the molecule, right? The molecule can impact plant health, or it can impact animal health, or it can impact human health. But the focus of PI as a whole is to make the molecule in the most elegant, efficient, and cost-effective manner. So the technologies that we've put in, the experience we have in the CSM business, both in terms of R&D and manufacturing, that translates to making the molecule the best way. It definitely helps us when it comes to the pharma business.
Perfect. Thank you for that very clear answer. Next up, I wanted to understand, so we have also mentioned that we have commercialized 15 molecules over the last 3 years, right? So, and we are planning to scale that up as well in this year. So can you help us understand, like the top 3-4 molecules, what is the kind of opportunity size, we are seeing that can drive growth going forward?
So let me answer that. You see, obviously, we can but getting into specific molecules and saying what is the opportunity size, you would appreciate these are closely held strategies of large companies, and we are bound by certain confidentialities to be able to express what they are and what they do. But at a high level, given the historical credibility of what we've been able to, clearly we see a couple of them who are in the big ticket items, and I see that in the next couple of 2 to 4 years, they will give us a substantial balancing act. Yeah.
Okay. Just one last question. So since I've been tracking PI for a good time now, and I've been listening to your commentary saying that we were wanting to diversify in categories like electronic chemicals. I think you also mentioned semiconductors some time back. So where are we on this diversification journey? If you can share some progress to help us understand better.
So I think you missed earlier, but I think in my communication it said we already started electronic chemicals. We've done 5 to 7 projects in that area. And we see a very good opportunity coming in scale, and we see this to become a good segment in the next 4 to 5 years for us.
Maybe Atul, you may want to add something, Atul?
Yeah, so I think, that's a very promising segment on which we continue to work, and there is a good traction. We have been able to connect with some of the global customers and working actively on some 10 odd, the projects which will, in going forward in coming period, will give us a good revenue as well.
Perfect. Thank you for all the answers. Wishing you all the best.
Thank you. The next question is from the line of Bhavya Gandhi from Dalal & Broacha Stock Broking Private Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. First question was regarding, we filed one product for first discovery molecule in India. Can you throw some light on the revenue potential? What is the product like? How would the margins look like? Something on that front.
As we mentioned, that is in the lepidopteran space, which is a pretty large segment of a crop, and multiple crops. You can appreciate the size of the insecticide market for those crops in a couple of thousand crores. So that's the opportunity segment that we have. Now, what happens in size and shapes, obviously, as we get closer to the market, at that point, it'll be right time to estimate size and scale. As you said, we're in the development phase. But it's a substantial, interesting excitement, more than the size, about the ability to put the innovation out there and scale.
Right. And on the pharma utilization, if you can throw some light, what is the peak revenue that we can generate on a 2 to 3 year basis? That will be really helpful.
I don't, because if we are looking at a growth rate, So there's not an asset utilization model here. This model is about CRDMO, where it's contract development and research services along with, and also investments that we're doing. So obviously, as we mentioned, we are looking to at least get to 2 to 3 times our size over the next 3 to 5 years.
Sure. That's it from my end. Thank you.
Thank you. The next question is from the line of Sahil Shirshad from Delta Investment Advisors. Please go ahead.
Thank you so much for this opportunity. So my question was on the agrochem molecules that we have launched in the last 3 years. How much is their contribution in our current revenue now, and how do we see this mix going forward? Thank you.
Sorry, just a minute. Agrochem's launched in the last 2-3 years. What is the contribution to the total revenue? Is that your question?
Yeah. So you talk about the freshness index, which we put up always. So that's around 16 to 18% of our chem exports business, and that's what has been growing substantially in the last few years.
Thank you. Thank you so much.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thanks for the follow-up. So if you look at the pharma business in terms of the revenue ramp up, now currently, what is driving the revenue? Is it API sales or R&D projects? And can you share, when you talk about client additions, what are the milestones you expect in terms of in a line of sight for the business in terms of contracts or order book for intermediates? How do you really actually put that in perspective so that we can get some sense in terms of?
So that is the first phase, we at the present moment are building a foundation. So it's too early to have order books and scenarios. We're building credibility in the market. We're demonstrating our ability. And our strategic focus is to move to the CRDMO play. And I would say that we are pretty happy with the progress that we made in that area. And the growth rate is primarily come from that area. And obviously, as you would very much understand, being in the CRDMO play, which you would understand well, there's a long-drawn gestation. But as earlier Ramesh mentioned, the seeds have been sown, and it is with building the right customer clientele base where a lot of efforts are being put by the team. And given the external dynamics and when the environment settles, we see this to turn up into a longer term as a 3 to 4 year scenario to drive the positivity. Ramesh, if you wish to add anything more at a high level, please go ahead.
Thanks, Mayank. I think that covered it well. But on your first question, both products and the services business, which is essentially the CRDMO business, both of them grew nicely year over year. So that's an answer to your question. They contributed to the growth numbers. What we are focusing on is to build a pipeline on the D and the M side that involves late stage programs, and we're doing okay there. It is a world that keeps changing, given some of the policies that we're still trying to get clarity on. But in general, there is interest in diversification. The China Plus One strategy is still active. We also have a site in Europe, which is attractive to a lot of customers to begin a conversation. And again, as I mentioned, there are some unique technologies that have come through the CSM business, flow being one example, that are also attractive to customers. So we've been leveraging the brand, we've been leveraging the science that is the foundation for PI as a whole. We're leveraging the fact that we have a EU presence, and of course we have excellent capabilities internally and people to sort of build the brand. So yes, there is significant traction. We just have to make sure that we are doing a job despite the uncertainty that's created with all the policies. So I think Mayank said it right. When everything settles down, we want to be there with the customers. So
if I might ask on the CSM business, this volume decline of 9%, is it because of deferral of orders, or is it because some of your contracts are maturing? And how do you see the business excluding new products kind of go back to the normal double-digit growth? Would it require new orders or repeat orders? How do you see that in terms of the progress in the business?
This is broadly, in line to balance the inventory level. So this is driven by, supply schedules. So in the quarter one, we have seen some sort of balancing, inventory balancing by the customer, but we expect those supplies to resume in the second half.
Okay, thank you very much.
Thank you. Ladies and gentlemen, that was the last question for the day, and I would now like to hand the conference over to the management for closing comments.
Yes, thank you everyone for coming on to this call. We continue to appreciate your support and keep our fingers crossed for favorable monsoons and agro-climatic situations. Thank you.
Thank you. On behalf of PI Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.